Hello, and welcome to another update video on silver. I wanted to take a moment to talk about the silver chart on a larger, higher time frame. We've talked about it extensively over the last couple of weeks in the weekend updates. To be fair, not much has changed. I haven't really made any adjustments, but I did make a few small additions, changed some colors, and tried to make it clearer than it was before. A week ago, around this time, I made a video and said that a blow-off top could happen at any point. And I specifically showed you this support area. Obviously, when I made the video last week, we hadn't reached those higher levels yet. I think it's important to recognize that I highlighted the risk. I highlighted that we were in the overbought range. I explained that the market had done what it needed to do, and while any upside was possible, as soon as we saw breaks of micro support levels on smaller time frames, this could go down fast. I emphasized that. I just want to highlight that because the move down did not come unexpectedly. I remember saying in several videos how surprised the public would be when we get that sell-off in silver and gold. And you can see here, this is still an uptrend. Yes, it's a massive red candle. And I have to say, if we compare that to 2011, we had a similar decline of roughly 40%, but I think it took about 4 days to play out back then. It was also a blow-off top. You might remember I specifically said I was concerned we would see a similar situation as in 2011 or even 1980, simply because the market, especially silver, often behaves like that. I just wanted to make sure it was communicated that you need a risk management plan. Be cautious. Not bearish yet, but cautious. The problem is that when structures break, when support breaks, things can happen so quickly. I can only say it, and I sincerely hope those warnings helped a lot of people here on the channel. But if not, then let it be a teachable moment. It's very, very important for the future. In the end, here on the larger time frame, all we've done is move back into support. We've now hit the very first Fibonacci support area, which is between $79 and $48. This is Fibonacci support for a fourth wave. Now, it's important to say that this is support. We need to distinguish between support and invalidation. A break below support is only meaningful when it's a sustained break. Ideally, support doesn't break to keep the upside expectations alive in the white and blue scenarios. If we get a break below support, we have a first indication that the orange wave B already topped, which is a really bearish scenario. So, in that bearish count, a top formed in wave B. This is the most bearish possibility. We would need a break below $48 to confirm that further, along with 5 wave movements to the downside. It's not my preferred count at this point. I would keep that as an alternative, but after a 40% decline, we can start to think about stuff like that. But really, we've only hit support. We've only just started a larger correction, possibly, but I'd say not yet a bear market. That's my take so far. But hey, it's possible. Let's be honest, a B wave can overshoot. We know that a B wave can form 3 waves. I often say that according to Elliott Wave theory guidelines, a B wave should not break above the 138% retracement level, which is at $85. Now you might say we broke above it, so it can't be a B wave. Well, in very overheated markets, I've seen B waves overshoot more. And let's also be very clear, this was not a decisive break. You could even argue the bears showed up right around $85 because we're way back below it now. So you could say that resistance was not broken decisively. That covers the orange count. In the blue and white scenarios, we can get at least one more high. In the blue count, this support area plays a role, and we could get one more high to around $170. The white scenario is the most bullish one. It tells us which support levels to watch along the way. There are several wave 4 structures that could still play out here, and this can carry on for a long, long time. This is a very long-term view. To keep it simple, we don't need to think about all these waves that might happen in a few years. It's important to focus on the now. And right now, we're holding a support area that is relevant for both the white and the blue scenarios, from $48.90 to $79.80. My take is that the crash we saw, which happened in just one day, is only the A wave of a larger correction. Whether it's the A wave in the blue wave 4 or the white wave 4 doesn't really matter in the short to medium term. I think this correction could play out for a little while. I mentioned in the short-term update I recorded yesterday that the default assumption after a 40% decline is not that we immediately start the next rally. The chart needs to prove itself. For now, my base case assumption is this is just an A wave. We might see a B wave bounce starting shortly, maybe even next week, and then get a C-wave decline. That might take a bit of time. For a more detailed short-term analysis, please refer to that short-term update. This is really just a long-term update, and the default assumption is we form a wider, sideways correction here. Corrections in gold and silver usually take a long time. So, I'll stay close to this, of course. Bear in mind, nothing is carved in stone. Markets are dynamic and things can change. If something changes, we'll probably see it first on the shorter time frame chart, and I'll keep you updated. I hope you liked this update. If you did, please hit the like button, leave a comment, and subscribe. If you're interested in additional updates, feel free to check out our membership. We have an Elliott Wave membership where we cover the S&P 500, NASDAQ, gold, and silver, with extra updates. You also get the live charts in the higher tiers. I also cover platinum, palladium, and have even started covering copper. We always cover stocks like PayPal, Nvidia, AMD, and Palantir. If that interests you and you want more updates on gold and silver, feel free to check it out. I've put the link in the description. Thanks so much, and I wish you a great day.